Alrighty, welcome everyone. My name is Tiffany. I'm from Plume Network. I will be your moderator for today. If you guys don't know, Plume is an EVM chain for RWAs. We're currently in our testnet phase right now with working with over 150 plus projects. And now we're going to be heading to mainnet soon. But let's give a quick round of applause to our lovely panelists here. And they'll be doing a quick introductions of themselves and their project or company.
Thank you, Tiffany. Hi, everyone. I'm Rania, and I head up sales in APAC for Ondo Finance. We're the leading provider of tokenized U.S. Treasury bills. We just crossed 600 million in TVL and mark our one-year anniversary for our retail-facing product, USDY, like 2 weeks ago. Essentially, we're a yield-bearing stablecoin. We offer you about 5.35% of pretty much risk-free, stable, and secure yield.
Hi guys, my name is Justin. I'm over here on the BD team for Injective. Specifically, if you guys have any interest in Injective, our slogan is blockchain built for finance with modules, order books, all built within our infrastructure to really help facilitate the trading and transactions that we envision to be fully on-chain within the next couple of years. I'll dive into a little bit more about what our infrastructure means, what it means for tokenizing and RWAs, but I'm happy to stop at that for now.
Hey guys, I'm John, or JP, CEO and co-founder of Mantra. We're a real-world asset layer 1. Happy to be here, continuing the conversation from Korea, and actually continuing the conversation from like 15 minutes ago with other folks from Ondo and Plume over at the Calendar event. So I'm a little bit out of breath. Got over here ready to share more about RWAs, asset tokenization, and some of the interesting stuff they're all working on.
Yeah, thank you everyone. So actually, fun fact, we've been kind of seeing this crowd like everywhere. Like in actually KBW, we had basically the same panelists, and then here at Token 24/9, we were also like all around everywhere. So it's always great to see like familiar faces. So I think starting off with some like general questions. RWAs have been around for a while. When you think RWAs, you think about tokenization of real estate and others. And so with that being around for years, and maybe like new players like institutions or hedge funds, coming into the space, how can you like educate them and make sure that they understand like what they want to tokenize and why it's so valuable?
Maybe I can start. Yeah.
Sure.
Is that meant for anyone specifically, or
for everyone? Yeah.
I saw Rania like.
We got this.
Okay, so I think we've seen different flavors of asset tokenization for a long time, and now we're calling it RWA. Before it was STO, and I think the end result is we need a new acronym for this. RWA is kind of a shitty acronym. In TradFi, it means risk-weighted assets, and what actually signifies being a real world asset versus like a fake world asset, or like what does that actually mean? But when you're talking about educating both institutional and retail investors, I think it's actually quite important to do it at both levels. It is a different game. And institutionally, I think we've really seen more product market fit, or PMF, for asset tokenization for a while. So if you're looking at all the major banks, JP Morgan, HSBC, Goldman, they all have tokenization mandates. And BlackRock, obviously, like you have Uncle Larry going up on CNBC every few months talking about tokenization, along with the Bitcoin ETF. And you actually now have it pretty ingrained in institutional people's minds that like tokenization is a thing. This is more of like a blockchain, not crypto conversation though. Whereas when we're talking about it in our context, at the retail level, it's much more of a permissionless network, crypto, not necessarily crypto and blockchain. And it is a little bit of a challenge because the people who are interacting with on-chain finance, DeFi, are generally kind of crypto native degens today, and the user experience is pretty shitty still in interacting with DeFi. So these people have a particular investment kind of profile that they're looking at, and generally it's not necessarily the most stable, the most secure, safe investment. They're looking for 50, 100x returns, meme coins, like kind of 100% yield type of things, and it does take some education of like why you should actually have diversification in your investment portfolio, and then also for the people who have never interacted on chain, like why is it better? So these things are going to take some time, and hopefully in the coming years we'll see a lot more retail participation. Obviously, like projects like Ondo have done a good job of actually starting that conversation with people, because
Yeah, I think there are two parts to this question. So on the institutional side, I think they both drive demand, but also the supply. You know, we talked about the BlackRock tokenizing their money market fund, which Ondo contributes about 50% of that, kind of 500 million TVL. But on the retail side, of course, you know, we want to encourage a lot more retail adoption. And JP did rightly point out, I think when crypto first started, people were chasing for that, you know, 50x, 100x returns. So kind of a 5%, you know, yield may not be very appealing to them. But I think increasingly as retail users also get more like sophisticated, especially for corporate treasuries, DAOs, they kind of see the need, of course, on earning kind of really stable yields. I don't think their investors necessarily would like them parking their money in something that promises like kind of a 20x return. We've seen this sort of slightly more cautious approach also, I think, in what happened in the last few years, of course, with, you know, several kind of prominent names and firms actually kind of collapsing. With regards to retail users, yeah, I completely agree. There's a lot of education to be done. So Ondo's launched a series of what we call like learn campaigns, kind of explaining kind of what the value of stable coins are. You can use them in form of like payments, remittances, but at the same time with our yield-bearing kind of stable coin, you can also earn the safe 5% yield that's powered by US Treasury bills, which is highly liquid, highly secure. And I think especially in emerging markets, there's really a strong demand for such like products in places perhaps, you know, even in like Brazil, Indonesia, maybe, you know, especially in more volatile currencies who are really volatile, like the Argentinian pesos, etc. There is a strong demand for US dollar, and therefore there's like T-bills that they normally can't get access to.
Yeah, I mean, the way that I personally think of it is you have to educate people by starting with the why, with why as in why are we doing this, and then you move on to what are we doing this with, and then how are we doing this. So from our perspective, we look at it as educating the mass market first. Why is there a need for tokenized assets to live on chain, right? Like the why answer could be fairly easy, right? Piggybacking off my last answer during the previous panel, it's to bring accessibility to the masses, to general market. So somebody who resides in India, for example, who primarily only holds rupees, can all of a sudden say, I want to be exposed to a better currency, you know. So let's say they want to get exposed to USD. They could do it in a fiat way, which is challenging because then now you have to KYC through multiple institutions before you get access to that, or you could do it through Ondos, you know, tokenized treasury bills through Injective, through USDY, and all of a sudden that becomes much easier. And then now moves on to the what assets are easiest to tokenize on chain. And we've started with Ondo, where I think we're starting to move towards credits, real estate, all these other, you know, miscellaneous sort of products, and we can kind of end there. And you move on to the how, and which is something that we're trying to really tackle, is how can we make these assets even more accessible for people in these, you know, markets that has more of a scarcity approach to things, right? How can we make it easier for them to then all of a sudden buy a tokenized BlackRock index on Injective on Helix and move on from there? But I think this is the education process that we need to start encompassing for the entire industry, and I would encourage people to think like that.
Yeah, I think I really agree with that because like education takes a lot of time. And so like I think one thing that, you know, a lot of people might not like think about yet is actually just also educating the more like Web3 native side on why RWAs are so important. So for example, at Plume, we do a weekly newsletter called Plumeberg actually that showcases like what's the latest news who's out there in the RWA space. And so we're also trying to hopefully educate the Web3 native masses first so that the institutions can also understand that there's people out there who are quite interested in the space. I think, you know, moving on, there's like a lot of talks about like compliance as like the main thing, the main topic of RWAs is like, how can you figure out compliance? So I think my next question goes to like Ondo is like, you know, you guys had a very successful year this year, you know, with your BlackRock and like the Biddle Fund. Walk us through how you guys kind of like worked with them and, you know, figure out the compliance piece.
So Ondo always takes a compliant first approach. Our founders were ex, Goldman bankers. while the regulatory framework in this area isn't necessarily the most clearest at this point, the US, for example, where Ondo is headquartered at, doesn't have a stablecoin framework. And so the nature of our product, it being a security, we're governed under the SEC laws, so our retail-facing products under Reg S, and therefore a 40-day seasoning period, while our institutional product, which is precisely this BlackRock product that I'll talk more in detail, is under Reg D. So how we kind of like work with BlackRock, essentially they've tokenized one of their money market funds. They're the first player, I think the largest asset management player to do so. Ondo currently feeds about 50% of this fund, so it's much easier. We see ourselves as a crypto native player and rails into BlackRock. For one, we have a lower minimum and our fees are slightly more competitive. BlackRock as a whole, I think an asset manager, they still, I think, don't understand this space as much as maybe crypto native players like ourselves do. So one of the more innovative approaches we use to do this is OUSG, essentially our tokenized the wrapper for the BlackRock Bidder Fund. It's accepted as collateral on Flux protocol. So we're the first of our kind to do that. And I think that proved to be quite like a successful use case, and partly also how Ondo started like kind of building our name and our brand as well.
Amazing, amazing. And I think, now to Injective side, you guys have done like a recent push into the RWA space. And I know you guys recently launched your tokenized index. Talk us a little bit through it and how you guys also think about compliance there.
First off, partially right. I think we've been trying to get into the RWA space, and we have been in the RWA space for essentially the entire part of the year now. So this is not, I guess, not really well known. It's earlier this year when we went through our mainnet upgrade in January, late January, we actually released something called the RWA module. And that falls in line with the compliance part of your question, which is what does it mean for us to launch an RWA module? And first of all, that goes back to the inception of Injective and the way that we look at things, which is plug-and-play module-based solutions. So for builders to come onto Injective to want to launch certain verticals or certain products, you can do so without having to build products from scratch. And much like that, we decided to launch the RWA module to really make things easier for RWA issuance companies to come onto Injective, run away with the RWA module, be able to whitelist addresses that you've done a certain level of compliance and checks on before being able to then create that distribution channel. So earlier this year, that's what we did, and that's in January of this year. And over the course of the last couple months, you would see that we've done work with Ondo. Right, we'll have some work under wraps with certain companies that I'm not sure if we're allowed to say for now, but it's going to be announced very, very shortly, and then we as a team are very bullish on. And to your latter part of your question in terms of the tokenized index that we recently released, it's really trying to make the BlackRock index even more accessible to people all around the world. So instead of now having to mint and only have access to that if you have $5 million just sitting around, you can do it as little as $1 in Helix, which is an order book, perp, and spot DEX that we run. Side note to really understand, though, the product that we did launch is a perpetual listing, meaning you're not actually holding it as a spot. You're going in there as a perp positioning, and you're able to enter long and short, depending on what you think the inflow of capital will be for the BlackRock index. So let's say you think that more people are going to buy into the BlackRock index in the next week. You're then, of course, not financial advisor. You're able to go in there and be able to long that on a perp positioning itself. And that itself, combined with what I just said, not having to hold $5 million to mint such a position, being able to do $1, being able to go back to my first answer, which is educate people on what this product is, getting access to treasury, tokenized yield, that's something that's important to us as well.
Amazing, amazing. Very excited to kind of see what you guys are going to continue to do in this space. I think last question to Mantra. You guys are talking about permissionless, permission chain. Walk us through how you guys think about compliance, KYC, etc.
Sure. So I think it's pretty important to be able to actually go after the people who are doing this stuff now, which is the on-chain users. You need to have permissionless access. Big banks have permission networks like JP Morgan Onyx, which do trillions of dollars of tokenized asset transfers, but none of us in this room would ever use that. Right? It's not accessible to the average Joe or Josephine, whatever. Anyway, and I think that's a problem. So in order to actually bring these assets to people, you need to reduce all barriers to friction, or as many barriers to friction as possible. Therefore, the idea of having a permissionless open network that anyone can permissionlessly read or write to the blockchain at one level and onboard in one level is quite important. Obviously, when it comes to the origination of assets and then initial distribution, in many instances, there is some sort of KYC or accredited requirement in terms of who can actually buy it. I mean, even with Ondo and USDY, when they mint it to someone who's been KYC'd. And in our instance, they mint it to our company, and then we distribute it out to the rest of the people in the population, right? Which is, again, kind of like it's almost like a pass-through of sorts. But again, there is a permissioning element there. And kind of where we are seeing the space as a whole is that you don't really get the application of regulatory enforcement much at the protocol layer, more at the application layer, in terms of how people invest, trade, on and off ramp, and participate in these products. In many instances, these products could be construed as securities. So you do have to worry about relevant securities laws in the jurisdictions that you're operating, how you distribute them, who can actually interact with it. And that's a challenge. So we've been going through a process in the UAE, in Dubai, to get licensed by the Virtual Asset Regulatory Authority for a RWA exchange. This has been a multi-year process. We thought initially it was going to be very easy, and it's 2 years plus and still not easy, which is a good thing, right? You actually don't want to have just regulatory authorities giving out licenses like candy or something. It should be a challenge to do it. They should have to go through a really rigorous process about making sure the right processes, fail-safes, and compliance programs in place. But this is something that, again, has taken us years. It takes relationships, it takes network, it takes money, and it does build up, in our opinion, a defensible moat about at least having a point of distribution for these things. So we've never really seen true distribution of these products, at least at scale yet. I mean, we're getting there. Ondo's doing a great job. There's 2 billion of tokenized treasuries, but 2 billion of tokenized treasuries is nothing when you're talking about how big the treasury market is, right? It's nothing. So there's a long, long, long way to go, and you need secondary market venues for these places to actually trade and be able to be interacted with. And that's something that's going to take, honestly, time. We use the phrase or use the expression like, you can fork code, but you can't fork a license. Because again, you just literally cannot. So I think that's an important thing to consider when you are talking about these more regulated products.
Yeah. Thank you for that. Okay, I think moving on to tokenization now. Composability is a very key part of RWAs, and Plume does that. I think also Ondo does a great job of that. And recently, that I actually learned that USDY is a little bit over a year old now, and you guys recently worked with Arbitrum, and now their developers and users can use this yield coin. Walk us through how you guys are thinking about this and how this really pushes the RWA space forward.
Yeah, so USDY just marked our 1-year anniversary about 2 weeks ago. Thank you. We've crossed 600 million in TVL in this, as JP said, 2 billion sort of tokenized treasuries market. In large part, we work with great partners, of course, the like of Mantra, Injective, that, we said as well. So USDY, I think one thing that's really unique about this, and one reason why I think RWAs are really here to stay, is we merge the best of both worlds, like offering this sort of investor protection that we typically see in traditional finance, like a bankruptcy remote structure. What that actually means is in the unlikely scenario that Ondo Finance actually collapses, your money is always protected and it's still yours. But at the same time, we also maintain, the permissionless nature of DeFi, like our token, USDY is able to have collateral on various different chains, for example, on Solana, but also, as you rightly point out, Camelot on Arbitrum as well, that we announced recently. So what this actually means is users, especially traders, if they want to open and maintain a certain trading position, instead of using USDC or USDT that they typically use, they can actually use our coin, and this 5% yield that they can actually get will help to offset this funding cost as well. And depending on the size of the position, this could lead to quite a significant savings actually in a year. So I think, just in terms of also how we're thinking about this going forward, definitely continue to partner with more, great names, the likes of the people we have on this panel, Mantra, Injective, Plume as well. Lots more chains, lots more of products in the pipeline that we're excited to announce as well later this year.
Cool. And I think my next question is actually to Mantra and Injective. You both are layer ones in the space and big players. How are you guys different from each other? Walk us through your tech a little bit and how you guys can get the new projects on.
Who wants to go first?
I'll go first. I'll go first. It's fine. Well, the way that we look at it is if you look at the current standing of blockchains and the way that people usually price assets on chain right now, it's usually done in an AMM environment, which all of us here probably knows. It's not very MEV resistant. It's not very, if you're moving large batches of transactions, it's always going to cause some sort of price slippages. So we addressed that, the founding team really addressed that from the get-go. We wanted to build an environment that has an alternate pricing formula to it. Not sure if formula is the best word here, but an alternate pricing system for it. And we looked at the traditional finance world, and we see that, in the traditional finance world, you got people trading on the order book all the time. And it's what people are most comfortable with. You look at people that's trading even on centralized exchanges now, which is, I know, a taboo to some, but they offer the best in-class user experience mainly because of their order book. And we wanted to bring that over to the masses, to Web3. So what really differs us, in my opinion, is two things. I'm not going to go into speed because I know that was like one of the questions maybe coming up. We kind of talked about it in the first panel. I think speed, TPS, and all that is a full-blown vanity metric. We don't think about that as much as we probably can. But all that to say, the order book itself that we run is completely on-chain. It's fully centralized, a fully decentralized limit order book, meaning now any assets that you want to trade, let's say today the Ondo team wants to launch a USDY DEX on Injective, you're able to just fork the exchange module, integrate USDY as an asset on the exchange module, and users now across the entire chain can use USDY in a very, very interesting manner that doesn't just have to be limited to trading. It could be, launching a lending and borrowing protocol in non-injective with the order book as the underlying liquidation engine and be able to liquidate your assets without, I cannot emphasize this strongly enough, any price slippages. That, in my opinion, is one of the things that really we've been doing well. We've done over 40 billion, in, close to, if not 40 billion in terms of transaction volume in the last 2 years. And the second point being the plug-and-play modules, these SDKs that we have that's unique to our chain, right? Being able to launch a DEX within seconds using the exchange module as the underlying liquidity engine, or being able to launch a prediction markets, which we have several coming up in the next coming days using our binary option modules. These are all things that we want to drive so that not just user experience, that's all obviously important, but from a developer experience, how do we address that and make building on Injective as easy and as effortless as possible?
So I'll probably take it in a slightly different direction. I think for us, our main goal at the end of the day is to be the ledger of record for real-world assets. That's a big statement, I would say. But what that means is effectively whether an asset eventually ends up on Injective, it ends up on Plume, it's an Ondo asset that maybe originated on Mantra and then goes someplace else, it's irrelevant to us. Right? The idea of provenance of where these things actually come from is quite important. And that is something that does require connectivity to the real world. It requires interactions with existing legal frameworks, existing legal structures, which is a challenge, honestly. And that's really where we're focusing. I think it's quite important, to Justin's point about making sure you have great user experience, great developer experience, and obviously they've done a really good job of that. And that's not saying that we wouldn't want to aspire to something like that too, absolutely. But I think where it comes down to for us, it's like the creation of a token is not the hard part. And honestly, the technology for RWAs, in my opinion, is already commoditized. It doesn't need to be on an RWA chain. It doesn't need to be on any specific chain. And where it really comes down to the nuts and bolts of like value creation in the end of the day is asset class by asset class. How do you bring these things on in a way that adds legitimate value to the issuer as well as to the end user? That's not that easy, actually, in the end of the day. A lot of it's just bringing assets on chain and now it's going to be magically liquid and more valuable. That's not the case. And then how do you create a liquid secondary market for these things to actually trade? That's a problem that we're all solving. We're all working on it on this panel and others. And I think if you look at the size of the space, or the opportunity at least, right? It's huge. I mean, like, you're talking multi-trillion-dollar opportunity here. You actually we literally want everyone on this panel, whether we're like quote-unquote competitors or not, to be successful. Like, legitimately, we want all of these things to be successful because there's so much that needs to be done still, and it is such a freaking hard problem to solve that you actually need multiple people and multiple parties and multiple platforms and chains to be able to do this that all have their specific geographic focus, their specific use case that they're really, keenly working on, their specific product, their specific distribution channels, and you really need it all to come together for this to actually have that like aha moment where this is really legitimately a thing, mass market thing. And, I use the term frenemies a little bit, like to describe
Partners.
Yeah, but in the end of the day, like it's more friends than it's obviously just friends, And there's such a big market opportunity here that in the end of the day, we really do want, all to play and do our own part in building this RWA economy up, because there's so much left to do.
Yeah, I definitely think that is a great point, is that, even though we all may be tackling the same problem, I think it's really just educating the masses together, whether it's like the institutions or the Web3 native crowd, to just really just push the RWA like narrative forward. And so, I think, along with that, community is like a really big thing in Web3. Without community, you have no project, basically. We've seen everywhere on Twitter, if your community is unhappy, then it's a really scary time for a lot of people working at the project side. So I think my first question is like to Ondo from Rania, you're tackling the community actually from the institutional side and the retail side. How are you kind of thinking and managing it from the both sides?
Yeah, so I think earlier on I mentioned that for the institutional side, they both drive the demand and the supply, and that's kind of how partly we're working with them at the moment. One of the products, that's in the works requires a lot of these institutional efforts, and we started by working with BlackRock, and their tokenized BUIDL fund. They are also obviously a big kind of like user, of USDY and OUSG as well, clients of ours. On the retail side, I think ultimately, to also what JP and Justin said earlier, it's all about, I think, delivering like value to the user, about building a lot of trust. I think if the users actually see that you build a strong brand name, trust, they see the value in your project, and that's kind of ultimately, I think, how they will remain loyal and kind of stay with like the brand. So, for instance, a lot of people might have first sometimes heard of Ondo partially through our Ondo token, but I think that is also actually very much driven by the fundamentals of our product, which is essentially a very safe, almost risk-free sort of yields that's powered through by like US like T-bills. In terms of how we continue to, I think, also kind of grow our kind of community following, I think it's also, again, through the likes of many different like partners and how we kind of can incentivize people to kind of like grow this like pie together as well.
Yeah, I think that's pretty amazing. I think, to Mantra's side, you guys are a Cosmos-based chain. Like, how are you guys thinking of like, one, working with the Cosmo ecosystem, and how are you guys like making sure that your community is always staying engaged?
So we've been around for about 4 years now, so it's not a new project. And sometimes that's a gift and a curse. You're not necessarily the shiny new thing that hasn't launched yet and hasn't really found its fair market value, right? So we do have a fair market value. It trades on major exchanges, including Binance, and OKX, Bybit, et cetera, Coinbase, et cetera. But maintaining that for 4 years is not an easy challenge. It's definitely hard. You've gone through several cycles. You've gone through definite ups and downs. And, when you're performing like we are this year, everyone thinks you're great. If it's, bear cycle and, your token's down 50%, 60%, 70%, whatever, you're not so cool. So maintaining that, consistency of just building even when the market isn't really like rating you is quite important. We are building on the Cosmos SDK, which same as Injective, which we just feel is a really proficient and solid technical stack to build scalable sovereign blockchain networks on top of. And that focus on specific use cases. Injective has their use case for why they built the Cosmos SDK chain. We have our similar, kind of app chain idea of sorts. But at the same time, we obviously know that there's a lot of different ecosystems out there, and that you shouldn't necessarily like close yourself off. We definitely believe that in the end of the day, maybe in 2, 3, 4, 5 years, it actually is irrelevant what chain you're on, and we actually hope you don't even know you're transacting on our chain at some point, because that means that Web3 has won, and it becomes just ubiquitous in how you actually transact value across all different types of assets. And that's kind of a goal I think we all want to achieve. But at the same time, in the crypto space, people they're so beholden to their bags. They're like, oh, we need to have this token, so people want to buy it and hold it, and we need to have, this chain front and center. No one else can be, used other than our chain. But I just don't think that's a great user experience. And if you actually put yourself in the perspective or the shoes of the user, what you really should be building is something that would be beneficial for them, not just what's going to make you rich.
Yeah, totally. And then, last question to Injective for the community side. I think recently at ECC, you guys launched the Injective Builder House, which I think is great to really push forward with the developers to learn about RWAs. So could you tell us how you're kind of teaching them about RWAs? Because I think it's definitely different from just a normal hacker houses, which, a lot of other chains are also building. So how are you tackling the RWA space and educating these developers?
Right. The way that we tackle it is to understand that community encompasses two large groups of people. First, the people that you see on crypto Twitter, so CT all the time. Those are obviously a huge driver towards how much adoption is going to be live on your chain. So that's the first part of the equation. The second part of the equation, really, for us, the way that we see it, I'm sure Ondo shares the same sentiment, is how this institutional play a role, right? Because community is not just limited to the hundreds of thousands of followers on Twitter. The world is massive, as JP was alluding to, $2 billion in tokenized assets. It's nothing compared to where we really can be. So how do we educate people about RWAs on Injective is a two-pronged approach. First, continual education through Twitter panels, Twitter threads on our official Twitter accounts, where you'll see what exactly does an RWA module mean, what exactly does a tokenized index on Injective mean. Because these, going back to my first answer again, the why, what, and then how, that's an important process for people to learn, because without those content being out there, the retail market is not going to understand what is going live on your chain. And then the second part of the two-pronged approach is releasing law-informed institutional research reports. That we're very fortunate to have an in-house research department that's releasing these reports on a very, very consistent basis. So then we can then send these reports to our institutional players, the on-chain liquidity providers, the on-chain market makers, the 40-odd of them that works with Injective, and say, hey, look, this is exactly where you can get in the mix. This is what is going live on the chain. This is what's coming up. And these are the technology and tech stack that's currently live. And, sort of educational process, like I said, for communities and for developers, they come in from any different channels. We just have to, we're ready, and we've been pumping out content for people, regardless of whichever channel that you're in, to come in, read up, and know exactly what you can do on us.
Yeah, I think I definitely agree with that, because I think most people in RWA space think about the institutions and then the retail users, but I think a lot of people actually forget about the developers as well, who are actually very necessary, because if you have no developers, then you really can't push the RWA space forward, because then no one is building it. So Plume is also thinking about the developers a lot, and we're actually going to be launching a series of hackathons upcoming, and so that we can really help out and really teach people why the RWA space is really necessary as well. I think, we're also, wrapping up on time. So this is actually my last question to you all is, RWAs, will continue to be here. But if the hype dies down and, after mainnet or TGE or once a token launches, how can you continue to really push out the RWA narrative and continue to make people really excited about the space?
So I definitely don't think the RWA narrative is a hype or will die down. I think it's really a trend here to stay. I think it's the first kind of tokenized RWA product that had a product market fit is the tokenization of the USD fiat dollar. So the stablecoin market today is really about 160 billion, which I still think is a really small fraction of what it potentially could be. And then following the success of this, people started seeing the need of other products, what Ondo did with tokenizing US Treasury bills, coming out with our own yield-bearing stablecoin. Both JP and Justin mentioned this is just a $2 billion market, which is probably just 1% of what the actual T-bills is in traditional finance. So there's a lot more room to grow. I think increasingly actually really bullish about this space and sector. I think not only we'll see a lot more change, a lot more providers coming on board, but also actually a lot more demand as people really start seeing the value of RWAs and what it can bring, both the protection that I mentioned we typically see in traditional finance, but also enabling the sort of permissionless and composable nature of DeFi. And I think this is truly unique to the RWA space and kind of why this sector I think will just continue to grow.
It's a loaded question, but one that I feel like the way that we internally think about it is not to chase after what is coming up next, what is in the past, or what's in the present, but rather just focus on what we're doing well, what's the bread and butter for us. Blockchain built for finance, we're going to continue to build towards tech stack and infrastructure that's going to utilize for developers and for users to be able to utilize our tech stack. And really, I think our module-based approach will continue to grow from here. So RWA module, great, that's for RWAs, but it doesn't just mean that we're going to stop there. We can continue to launch modules that will be complementary goods and products towards the RWA space. And so, well, I guess the latter point to that is also we continue to try and grow, and I guess I'm kind of spanking myself now, the speed of our chain, but it's larger than TPS. It's end-to-end latency, it's instant finality. How can we make sure that this is all continue to be scaled on a chain level perspective? Because all this without the speed, without the module-based approach, and I'll get into the module-based approach and why we think it's fundamental for a project to live on our chain is because, let's say today let's use the RWA module, for example. Let's say one of the projects that's launched using our RWA modules for some reason becomes insolvent. They decide to go down, they have to sunset. Just because they use our RWA module doesn't mean that the other projects using our RWA module is going to be affected. These are all operating under very isolated market approaches. So that's the way that we think of it. Like, how can we continue to do module-based approach while increasing the performance of our chains? And hopefully that's the right answer for what's to come.
So I think when we look at RWAs, we see it in like a three-phased approach, and we're in phase one right now. Phase one being supply side, and that means we need to bring more high-quality products on chain, right? If we only have 2 billion of tokenized treasuries on public permissionless blockchains, that's a problem. We need other different asset classes. We're looking heavily into real estate, into funds, money market, private credit, private equity, et cetera, and IP. Those are like the three big ones because they're, big number deals that you can bring on chain. They have mass market as well as institutional appeal by nature. And in general, these are things that people are buying in the real world. Phase two would be liquidity. So how do these things actually trade? Where are their secondary market venues for distribution? And phase three, although these are not like hard stops, right? They all blend into each other and they're all kind of going to go in parallel as well. Phase three would be this composability layer. So like, how do you use this as margin and collateral in lending and borrowing protocols or perps? How do you bring these assets into multi-chain environments and different financial primitives, and they become really ubiquitous, almost like in the palm of your hand, that this is just the way that finance works going forward. That's going to take time, but I think, if you're betting on finance living on chain, like I think a lot of us are, then it's almost an inevitability, and irrespective of hype, narrative, or whatever, you're just going to continue to build and continue to work on what we will inevitably see as like the final solution for asset transfer.
Alrighty, I think that actually wraps it up. We're out of time now, so thank you everyone for listening to our RWA panel. If you guys want to learn more about Plume or any of the other projects, come find us afterwards. Thank you everyone.